Welcome to Factful Finance. Are you a high earner looking to make your money work smarter for you? Well, here's a surprising fact. Did you know that over 50% of high earners still don't have their financial strategy fully optimized? If you're one of them, this is the wake-up call you've been waiting for. Today, we're diving into how you can invest wisely to grow your wealth and secure your financial future. Before we dive in, a quick disclaimer. The content here is for educational purposes only. Recommendations and tools mentioned don't imply endorsement. For personalized guidance, always consult a professional. Now, let's get down to business. As a high earner, you're in a unique position to accumulate wealth, but the key is making your money work for you, not just earning more. A common mistake is simply saving the surplus, but without strategic investment, that money will lose value over time due to inflation. So, how do you go about investing wisely? Let's break it down. First, let's talk about diversification. This isn't just a buzzword, it's the foundation of a solid investment strategy. Diversification means spreading your investments across different asset classes, stocks, bonds, real estate, and even alternative investments like private equity or commodities. Take Noah, for example. A high earner in tech, he had a large portion of his wealth in tech stocks, but after experiencing a downturn, he diversified into bonds and real estate. This helped him weather market volatility and achieve steadier growth. But how do you diversify effectively? Well, consider your risk tolerance and time horizon. High earners like you often have a longer-term perspective, which means you can afford to take on slightly more risk, but it's important to find the balance. Experts recommend investing a portion of your wealth in low-risk assets like bonds, while allocating the rest to growth-focused options like stocks or real estate. A 60-40 stock-to-bond portfolio is a classic example for many investors, but there's no one-size-fits-all. Next, let's touch on tax optimization. If you're making a six-figure income, chances are you're paying significant taxes. But don't worry, there are ways to minimize your tax burden. One strategy is tax-deferred growth accounts, such as 401ks or IRAs. These allow your investments to grow without being taxed until you withdraw. For even higher earners, backdoor Roth IRAs are an option to consider. Another powerful tool is tax loss harvesting, where you sell losing investments to offset gains, lowering your taxable income. James, a successful entrepreneur, took advantage of a self-directed 401k to maximize his retirement savings. By contributing the maximum allowed, he shielded a significant portion of his income from taxes, while his investments continued to grow, untouched by the IRS until he retired. Another critical factor is time. When it comes to investing, starting early makes a massive difference. Let's say you start investing in your late 20s. By the time you hit 50, the compounded returns from that early start could easily outpace what you'd have made from investing later in life. The earlier you start, the less you need to save to reach the same financial goal. Now let's talk about real estate investments. Real estate is a fantastic wealth-building tool for high earners, but you don't have to be a property mogul to benefit. Look at Emma, who decided to invest in REITs, real estate investment trusts, which offer exposure to real estate without the need to own property directly. For high earners, this can be a way to tap into property markets without the headache of property management. But if you're open to the idea of owning property, turnkey properties, or real estate syndications, are two options that provide passive income without requiring you to manage the property yourself. These avenues allow high earners to take advantage of the real estate market without the day-to-day stress. Finally, let's talk about automating your investments. The beauty of automation is that it allows you to invest consistently, even when life gets busy. Set up automated contributions to your retirement accounts, brokerage accounts, or even your personal investment fund. This ensures that you're always putting your money to work, and you'll benefit from dollar-cost averaging, where you invest a fixed amount at regular intervals, helping to smooth out market fluctuations. So let's recap. As a high earner, you need to focus on diversification, tax optimization, early investing, and passive income. Building your wealth isn't just about earning more, It's about investing wisely and making the most of the financial opportunities at your disposal. What's the first step you'll take toward making your money work smarter? Share it in the comments below. I'd love to hear your plans. And if you like what we do here, why not subscribe so you don't miss out on more expert insights? We think you'll enjoy the video that's shown on screen next. Thanks for watching, and here's to your wealth growth.